Hello, hello, hello. Welcome to Trading Made Easy right here on YouTube. I'm certainly glad you found yourself here. Okay, so I have a quick video that I want to do, and I'm basically answering a question that I thought that I would just do a video on because it was a pretty good question. And that question is, do I trade the news or do I trade the chart? In other words, do I trade fundamentals or do I trade technical? Fundamental meaning the news, real events, and how that um, interacts with the chart, or technical meaning you're looking at market structure and technical analysis, right? So which do I trade? How do I mix the two? What does one trump the other? And here's my response to that. Nothing. Nothing supersedes structure. Now, price is going to repeat itself. We know that. It's going to repeat those structural areas. It's going to repeat certain patterns. And we can look in previous times where we can see those same things has happened in the past. That's what price does. That's what it will continue to do. And the reason you don't want to forego that, in my opinion, is because the market always respects it. And that has been proven over the years, right? It always has been, it was proven over the years. Now, news, I'm not saying it's not important. It is important to understand what's going on, what's upcoming, and how that may impact the price movement. But never, never forget, even if there is a opposite reaction to the trend, it always go back to the trend. It always goes back to those previously respected structural areas. So with that being said, the market structure, technical analysis, in my opinion, always supersedes anything else. Anything else. And I can recall actually earlier on when I was trading, of course, I'm trying to learn everything, and I would saturate myself with the news and what different news commentators are saying on a site that I'm going to go to called FX Street or My FX Book. And you have these analysts, right? Currency analysts, and they're offering their insight as to what price is doing and what it may do. And if they said anything that was different than what I was seeing, I just forewent what I saw, and I went and based my trade on what they said, only to find out that the market was doing what I thought it was going to do, which was based on structure, and I blew it, right? Now, the reason for that, of course, is because I wasn't confident in my own ability. I wasn't confident in what I knew. I wasn't confident. And so if an analyst says something different, despite what my eyes saw, I went with it. So I want to help you avoid that, right? I want to help you avoid doing that by understanding, basically, don't put anything ahead of structure, because price is going to respect those areas. It will respect those areas. Now, what I want to show you in this particular example, I'm on a daily time frame, is Euro USD. And what I'm going to do is I'm going to go over to FX Street, which is where I was, right? And I want to show you this. So let us go to FX Street right here. And all right, so on here, we have USD, Euro USD price analysis, and the bias remains bearish despite Thursday's doji, right? Okay, that's great. And then it goes on to talk more about what price did previously, and just pointing out some different elements that confirms or justify their opinion of it continuing to be bearish. And that's great. That's great. Now, if this was a different opinion, if I was going bearish and they were saying that it's, we got a doji and it's going to go bullish, then I moved my trade to bullish. That's the type of stuff I used to do, right? So until I learned better, And what I know and what I will tell you is that nothing beats structure. Nothing beats structure, okay? and price is going to tell you what it wants to do. And I'm not saying that it can do something different, because it absolutely could, and it could do that at a drop of a dime, right? Meaning, you know, our global leaders may say something, do something that will certainly shift the market. That happens. However, that's for a very short span of time, usually an hour, maybe two, and then the market resets and goes in the direction that it was previously going in. That happens all the time, all the time. So with that being said, as I mentioned, you know, the analyst is talking about those different justifications, basically, as to why their bias is that it's bearish, right, on the daily time frame. And they talk a lot about the doji. And of course, we know the doji candle is a candle that signifies indecision. And so typically, when you see a doji, within the next two candles, you should see an opposite candle within the next two candles. It does indicate indecision. Now, because you see an opposite candle within the next two candles doesn't mean it's going to continue to go in that direction. So what you need is more confluence, right? Strong confluence that supports the overall direction that price is telling you it wants to go, right? So we read price, we read and we analyze price based on previous behavior and based on very specific indicators that I use and others use to determine what price wants to do. But at the foundation or at the core of all of that is structure. That's it. That's it, right? And so that's what the analyst is describing here. And on the daily, and they even went back and, you know, they talked about the previous support and resistance that took place in August. And so it's good information to confirm the direction that price is going in. And I'm not taking anything away from that. However, and here is my point. However, when you go on the chart, price is going to tell you that. Whether you looked at the news and these reports from the analysts or not, I'm not telling you not to look at the news. I'm not. You want to use as much information in your arsenal as possible, but you do not want to forego what structure is saying. That's what I'm saying, right? Now, so with that being said, that's what's happening here is bearish, and they're talking about on the daily chart, the support that turned resistance back in August. All of these are reasons why they feel that it's still a very strong bearish move on the daily. Now we're going to switch back to the chart. And not only are we going to switch back, but I'm going to show you the power of our trading system as well. Okay. So now we're back on the chart. We're on the daily. We are Euro USD. And the bias, remember, the bias was bearish. And they gave a list of reasons why they're saying that it's bearish. Great. We switch back over to our trading system. Simplicity is what you're looking at. And voila, without knowing any of the information that was reported on in the news, right? Any of the information that the analyst just reported, without knowing any of that, we can come to our chart, our trading system in particular, and we can look at it and tell you exactly where price wants to go. That is the power of the Simplicity trading system. And that is the very reason why every trader should have it. Again, I'm not telling you not to give credence to the news, but you never want to sacrifice structure. You don't want to forego structure. And our system gives you the extra insight, right? Where you don't even have to try to figure it out. It gives you the extra insight to let you know what price wants to do. So clearly, we have price that is bearish. We have a big arrow pointing down, obviously, right? And we have price inside of our supply zone. which is where sellers begin to build their strength. So just those two pieces of information confirms that price wants to start going down. Now, again, can price rally back the opposite way? Absolutely. That is why you want confluence, right? You want confirmations to support. Price still needs to do certain things before you enter into the trade. But simply looking at price, looking at it with our system, you clearly can tell, you clearly can see where price wants to go. And you didn't have to look at the news for that, okay? So again, that is what makes one of the reasons why this system is so priceless. And again, every trader should have it, because you can do it the hard way. You can. Many traders are doing it the hard way. Trust me when I tell you. Or you can do it the easy way, allow the system to be an additional insight, right? Additional insight to help you to determine what price wants to do. I also do coaching sessions as well to help you to really see the market for what it is, using the system that we have and the simple, easy trading strategies that I bring to the table. So I'm not saying you can't lose. No. You're going to lose some trades. We all do, right? We all do. Multi-millionaire traders lose trades. So, just accept that, right? But the losses should be very minimal when you connect with the right community, which this community, Trader Made Easy, is the right community. I am a community within the big community, which is Super Easy Forex. So you want to be connected there. And when you get your Simplicity trading system, you'll be connected. So I'll leave the links there so that you can get everything that you need and start seeing the market for what it is, the simple, easy way. And as I mentioned, we do have additional confirmations that you want to adhere to before you actually enter into the trade. Now, as you can see on the daily, obviously, we're bearish, right? Price wants to go down. And that's what is actually in a continuation right now, right? Is proceeding in that downward motion, that downward momentum. That's what's happening right now on the daily. We also have our MACD that confirms that movement, right? Simply because it is basically, it has already proceeded below the center line. I call it the 0, 0 line of the MACD. When that happens on your MACD, the trend is actually changing. And so that's what's happening on the daily. Now, of course, as you drop down to the lower time frames, you may see on a lower time frame that price is actually in a correction. Remember, right now, price is in a continuation. Right here, it's in a continuation, which is always in the direction of what? The trend. But as I said, on the lower time frame, it may be in a correction, and that's perfectly okay. The higher time frame, being the daily in this case, is bearish. And so what you can do is you can follow the higher time frame trend, right, to catch the overall move. Now, the expectation, provided, let's say you got it somewhere around the bottom of the zone, right? The expectation at this point right now is, what is that? 567 pips. That's the big move. Now, obviously, guys, price is not going to just drop 567 pips. That is the reason why on the lower time frame, you'll see a correction. It has to correct itself. But the overall move, that is the potential amount of pips that you're looking at on Euro USD. Okay, so let's drop down and let's see where is it going to be pulling back at. Okay, so we're on the 4 hour and we have a bullish big arrow here, and we have price currently where? In the demand zone. That those two pieces of information right there tells us that price wants to begin to move up, right? Which will be a correction from the daily time frame. Now, Is it in that momentum yet? No, it is not. It's not. It's still early. Remember, when the moving average on your MACD crosses your center line, the trend is actually reversing at that time. So because we're not near that, this will still be considered early, which means the overall momentum on the 4-hour is still bearish. It's still bearish. Not until it meets certain criteria on the 4-hour in a bullish momentum that you should take this bull, right? That you should take this bullish run. It's just not ready yet. Now, of course, I do teach a early entry strategy, and for those of you that may be interested in that, it's very, very powerful, very consistent. That is part of my coaching session, and so I'll provide that insight as well. I'll have, again, click the links and get connected, right? Get connected, but you must have this system. So if you don't have a system, you can purchase the system inside the description of my video. You got to have the system, because I'm just not trading the difficult way anymore. I did that when I first came in. I'm thankful for it, but I will not retreat. I will not go back and start doing things the hard way, because when you have been seeing the light, when you've seen the light, it's hard to go back to the darkness, right? So I have no intentions of doing that, and I teach simple, easy trading strategies. So you have to have the system, right? You have to have the system, and you'll be so happy that you have it. So that's what's going on the 4-hour. We're beginning a correction, right? We're beginning a correction. And now remember on the daily, the overall move was what? 567 pips. So let's just say right around in here, and we expect price to come up to this point here. That's 203 pips. That's 203 pips that we expect for the pullback to be. Now, the higher and lower time frame relationship is another training course that I teach as well. It's very, very powerful, and I promise you, when you have a full understanding of high and lower time frame relationship, you're going to be positioned, honestly, for some major consistency, okay? There's more involved, but you'll be better off for it when you get a full understanding of that. So with that being said, we're looking at approximately 203 pip correction or drawdown, right? From the 4-hour view. And let's go down to the hour. On the hour, okay, we're still looking at a bullish correction, right? This is a correction. Why? Because the overall trend on the daily is bearish. So we're looking for this correction here, okay? And let's see, somewhere around, well, we would have, based on my rules, we would have been around in here. And on the hour, it's 49 pips, right? On the hour. Or let's just take it at the bottom here, right? Where this wick action. We can do that. Let's see. From that bottom to the top is 80 pips. So we went from the daily 567 pips to the 4-hour, what was the 4-hour? 203 pips to the hour, now 80 pips. Do you see the correlation? Do you see the correlation, right? So as we drop down, of course, the pip count is going to decrease as well. It's going to decrease as well. But keep in mind, these are nothing more than pullbacks. These are nothing more than retracement. These are nothing more than correction. The overall move is bearish, and the overall pips is 500 plus pips, right? Now, if you want to capitalize on that, then of course you'll be trading based on the daily, right? Based on what's going on the daily, you'll be trading that time frame, and you'll be trading it for the duration of that run. Now, do you have to get all 567 pips? No, you don't. You have 567 pips in which you can capitalize on maybe 100 of those pips, maybe 200 of those pips, maybe 80 pips, whatever. That's the pot. That's the pot. 567 pips is the pot. How many pips out of that 567 do you want? That's the thought process. And you position yourself for that. But it gives you what you're working with, right? It gives you what you're working with. And when you have a good understanding of high and lower time frame relationships, you know how to position yourself to maximize that, So that's it, guys. That's it. So I just wanted to primarily answer that question. Which do you do? Do you trade based on fundamentals, or do you trade based on technicals? Technicals 150%, because market structure doesn't lie. It does not lie. And when you go where price wants to go, you're always going to be in a better position, right? And you absolutely need the system so that you can make trading life that much more easier and profitable. That's the name of the game. So until the next time, hey, I always forget to do this though. Subscribe to the channel if you have not already. And for those that have, thank you so much. Stay tuned, stay connected, more to come. I'll see you guys on the next video. Bye-bye.